Good morning, everyone, and welcome to the European Crossover webinar. And we have seen the indices. Actually, we're seeing the Nasdaq come off a little bit after bursting up to some highs overnight. We can just go to that quickly. Dipping back down a little bit. Yesterday was an interesting day because we were back and forth, and at the end of the day, they really came on strong. We're actually coming in towards the same day VWAP, but they came on pretty strong yesterday and continue to add on to those gains. You can see here into Asia and pushed us quite a ways here. We're kind of paring back a bit, but we could have gone a little bit further. We've got some resistance coming in at this top of the zone here, 13,186. Came up a little bit shy of that. Kind of holding here at this 13,116. We're pairing back to that. Kind of rather see that tag that area here and then see what we got. S&Ps also moved up, but they didn't move up to new highs. I mean, they did, but just only like about a couple of handles. Previous all-time high was, I think it was 39.59 and 3/4 or 39.60. So we did move up to 4 handles. Not as big as a dramatic move as the Nasdaq to a certain extent, although the Nasdaq did not move to all-time highs. But we saw a pretty good run here. It really goosed some people on the close as we got late in the day, and they really pretty tricky area too. We came here, we were looking for this 13. I was looking for this 13,012 earlier in the session, and it just kept coming up short right here. We finally make it late in the day, and we dip back, and it looks like they're not going to be able to hold that. Then they come back, and then they just really clean some people out big time. And you can see we got beyond this 50% in the point of control. We dip back a little bit. We held, and we took them up in Asia even further. Now we're kind of pairing back. Kind of like a little bit of a mixed bag we have here. Also take a look and see where Bitcoin is. We have gone and pulled back. We talked about this area here, and it was, I thought they would pair back on the news from India, but this was the demand area, and they were trying to make a stand here. You can see that below this 56,000. So I think we were here at the time, if I remember correctly, or maybe here, but they tried to hold it here, and if it broke here, that opened the door for us to go lower, and lower we did, even taking out the key area right now is going to be and it makes some sense because we've had a lot of hullabaloo about Bitcoin, so probably a good area where they've taken some profits. But this is a key area here. It's just below 54. Seen a nice bounce from that area too. It's going to be about, what, 53.5. See here, we pair back a little bit further, down here 13,110. Right here at the same day VWAP. We're going in, take a look where we stand here. Let's take a look here also on economic data. We did have French CPI data come out, came in pretty much in line. And then Italian consumer prices, CPI, comes out. Final reading is it's going to be at the top of the hour. Then we get German zoo numbers. That'll be out in about another almost 2 hours from now. They're expecting 74. Prior was 71, so a little bit of an improvement there. Although there's been some concerns about the virus or the AstraZeneca. So might be a little bit of a mixed bag in here. As we come to the States, we are looking for New Zealand dairy prices. And then as we roll further into the States, we will have import-export prices at 8:30, as well as retail sales, which should be key. They are expecting a little bit weaker. So retail sales here at 8:30 Eastern, and industrial production capacity utilization at 9:15 Eastern, with business inventories at 10 a.m. and NHB housing market. Yeah, Mira, I don't follow the DAX. Sorry, I don't have any information on the DAX. I don't think there's anything on the. I know it's at all-time highs, but I don't follow it. Yeah, Pooja says it will hit the monthly pivot on the NAS at 13,147. Bear with me. Well, let's see, we would have gotten above that. We can go to see if I can see anything in a monthly chart. Hold on. Let's take a look here. Now we'll move into a monthly. I'm not seeing anything on the monthly that denotes that as a key level. I see 12,906 as being key, but I don't see anything up there that indicates that. It could be wrong, but I just don't see it here. Take a look on a weekly. I see a prior high from 13,122 on the whatchamacall continuous chart. I'm not seeing anything there. So look at a weekly and a monthly. And there's 193, a prior week high. Which that's what I'm saying. I'm a little bit surprised it didn't try and go up there and reach that. And we're actually pairing back right now. We're at 13,106 now. Oh, okay. Pooja says not on a time frame, but on calculated pivots like the daily, weekly, and monthly. Okay. The way I always look at it, I look at the closes. And that may be another way to look at it. Like you said, calculated pivots. I know that they've done, in the past, way back when, I think it would be you would add the high, the low, and divide them by 3 or something like that. But me, I always look at the closes because I always say that's put up or shut up time. So it's like, whether you're looking at a half hour, an hourly, a 2 hour, 4 hour, a daily chart, if you're in a position, you go, okay, well, I got to be out. If it closes there at the top of the hour, then I'm done. I got to get out. And so quite often that's what I'm saying is I'll use my key levels as the actual close on whatever the time frame may be. Let's see here. Quiet activity overall in currency markets. We're still pressing a little bit lower. We're 13,101 now on the NASDAQ. I didn't really see anything, as I told you. I didn't get up real early or anything like that. I didn't have any positions on. But then with the close that they had, I knew they could continue to push higher. I wasn't sure how much higher. I'm just a little bit surprised that I thought we would have maybe tried to tag that upper region. Going back here again. Right here. I don't think I look as if I missed anything specifically, but I would have liked to have seen us tag up in here. And then if they started to fade from there, I probably would have jumped in on that. Same thing here. I don't really follow. I do look at the 5-minute just to see where it's at. And I've also put the VWAP and 2-day VWAP on here because there was just too much going on with the half-hour chart. I've got here to the 2-hour chart, but really the market to find these indices react very well. with the 30-minute chart. I use it in conjunction with that 4-minute. 4-minute kind of gives me the lay of the land, as you can see here. But the market seems to respond very well if you're day trading this into the 30-minute, and then trying to put the VWAPs on that. It just made it just too messy with what I'm putting in the my profile numbers. And these profile numbers have been just awesome. The way I use it, I don't know if I use a profile the same way other people use it, but I kind of look for the way some people will look for confluences. I look for confluences using the that, and so you can see how important that initially the 13,000 value low from a prior session was here, and then we had that initial balance area. So you can see here this marked a good area. Originally, I thought that we were going to come right in this area and fail, but you can see we made it right there, and the market turned lower. But the more I use these, they seem to work very well. I use them as basically a confluence, the same way we would use, let's say, a level and then a fib level, which I do use the fib levels too, because this area down here on Friday was at 38%. And I was talking with some people, and I was letting them know, like, this is, I think it's a weak low, meaning that although it's more of a profile parlance, but I was saying is that, hey, we're coming into this area, and at the time a lot of the other markets were pushing down. I said, man, we should just be smashing lower, and we're not, and we're coming into support here at 60. We've got a point of control, and we got the 38%, and that was a low there. And then we finally, it didn't immediately just take off, kind of held there before it eventually moved higher. We saw the same thing the other day too, or yesterday. Kind of frustrating because I actually picked this up, as I told you. I think I picked it up I got long, I think at 68 or 69. I was playing the short side, and but the market wouldn't do anything. And then as we came into, actually I was up real early, and then we came into the European session, we saw this market screwed up, if I remember correctly. But this 30-minute just works amazingly. But I'm looking here. I don't normally pay attention to YM or Russell, but I have noticed that these markets take their cue off of them. You can see the YM still holding up relatively well. Russell is the one being a little bit on the weaker side here. Once again, I don't pay too much attention to them. I stick to just following the NAS particularly. I do kind of keep an eye, let's say with the S&P. You can see here that if you look at the S&P, we did go to new highs, but it wasn't like we took off, which probably made this move a little bit suspect here. But once again, I didn't see anything that stood out particularly to say, okay, that's as far as that goes. So we're just kind of paring back, maybe because the move was a little bit overdone, not sure. So let's go on and move into the news, and then we'll move into the analysis. Like I said, kind of give us a lay of the land. So the Aussie and New Zealand dollars tread water ahead of the Fed policy decision. The Australian and New Zealand dollars were a little change against the greenback on Tuesday as the market waited to see whether the U.S. Federal Reserve monetary policy decision addresses the recent spike in bond yields. The Aussie was trading only 3 basis points lower at 77.52. The New Zealand was unchanged at 71.99 from its 2.5-year high of 74.64. The market really is sitting tight, waiting for the Fed decision, because the huge move in U.S. bond yields have been so key that the market really needs to see what they plan to do, said Stephen Dooley. While there's been some expectations that the Fed might try to calm the bond markets, yields have risen some 60 basis points from the Fed's last meeting. The consensus view is the Fed's Powell will not make any changes to policy settings. However, if they start to take some of the policy actions like buying bonds further down the curve to push yields lower, then we could see the U.S. dollar move sharply lower and Australian dollars press higher. The Aussie's release of the central bank's March meeting minutes, where it reiterated the rate increases would be unlikely until at least 2024, had little impact on the currency. Yields on Aussie 3-year government bond yields were a little change at just a hair over 10 basis points, far from the 188 or 0.188 they jumped to late last month. New Zealand government bonds were trading higher with yields of 6 to 8 basis points lower at the long end of the curve. The dollar firm holds firm in cautious trading before the Fed meets. The dollar clung to small gains on Tuesday as caution reigned in currency markets ahead of the major central bank meetings. Greenback hovered just off its highest June since versus the yen, and cemented a position of around 1.19 euro. Expectations are running for monetary policymakers to shift from accommodation stance despite forecasts of rapid economic growth in the wake of an accelerating COVID vaccine rollout. Investors will pore over whatever the Fed has to say about the run-up in yields, which have risen on the bets that economic growth and inflation could prompt a faster than expected normalization of monetary policy. It's a very pivotal meeting from that perspective, said Mayank Mishra. The other thing is that is being awaited is any decision on the suspended leverage ratio exemption. We don't expect any explicit pushback on back-in yields, but an extension of the SLR can offer some relief to the market. The SLR exemption, a regulatory break that allows banks to exclude reserve deposits and treasuries from capital ratios, is due to expire March 31st. The dollar was a little change at 109.17 yen after risen to a 9-month high of 109.36. We've been talking about that 109.57 since last week. The euro was largely flat at 19.33, languishing below 120 since March 5th. European vaccine rollout has been hampered by the suspension of AstraZeneca shots in Germany, France, and other nations. About the serious side effects, sterling fell to 38.71 ahead of the BOE meeting on Tuesday, where the central bank is expected to keep its benchmark interest rate at a historic low of 10 basis points and its bond buying program unchanged. The dollar's index against six major currencies was at 91.79, rising at only 0.2 on Monday. So with that, we'll just go and move into the analysis. And you can see the euros, not a whole lot of move from yesterday, rather subdued. I think I even mentioned that in the comments. So the euro traded in a tight range on Monday. Support on Tuesday will be 18.91 with resistance at 19.68. Onto the cable. Cable traded as the euro in a subdued range to start the week. Resistance on Tuesday will be 39.71 with support at 38.16. Boy, are we tight. Onto the Aussie dollar. The Aussie closed slightly lower on Monday amongst the backdrop of a sharp fall in Chinese equities. Resistance on Tuesday will be 77.84 with support at 77.12. Onto the Kiwi. The Kiwi edged higher to start the week. Resistance on Tuesday will be 72.33 with support at 71.41. Dollar CAD. The dollar CAD slipped further on Monday. Support remains the immediate 24.35 and solid demand at 24.11 with resistance at 25.60. So those are the figures we already had from yesterday. And you can see here the low yesterday was 24.40. We had 24.35. Move on to the dollar peso. No changes here in the peso. So no change in the peso. We've kept everything the same. Dollar peso 2052 and 2083. No changes. And very quiet session. Looks like yesterday's high was, oh wow, not bad, 2083. That's just as high. So we're keeping that the same. We're rather quiet trading anyway. Going to dollar yen. Dollar yen continues to hold the upside. Resistance remains the weekly level of 957 with support at 841. So no changes there. We'll take a look once again at the weekly. And there's that 957 we've been talking about since last week. Certainly looks like he wants to visit that. Let's go move into the dollar index. So the dollar index traded in a stifled range on Monday. Resistance will be 92.17. You can see that. We're just going with the technicals. With support at 91.51. On to the cross rates. No changes here in the Kiwi yen. And once again, we're seeing very quiet trading. So the upside is 78.71. You can see that. Downside 71.39. I mean 77.39. Very, very quiet trading. Super quiet trading, matter of fact. Onto the euro pound. A little bit of an upside kick here. After those, remember we mentioned those two back-to-back dojis on Wednesday and Thursday. Seeing a little bit of a push here. On the upside, we have 86.18. We're there right now, and we are seeing this little bit of an upside push. We will adjust this a little bit higher. You see right here, we got all these touches coming across. So if we do see some short covering, that's within reason, we're going to be looking for 86.46. On the downside, we'll go to a 2-hour chart. You can almost go right there. May be cutting it a little bit tight. Right there. 85, 86. Onto the Euron. Seeing the slightest bit of a pickup. We had 53, 52. Right now, we're going to go right there with this low there, which is 53.74. Upside, 54.87, no change. Onto the Euro Kiwi. Still quiet itself. 65.72 is going to hold. You can see that it did hold today, held yesterday also. Overall, I mean, there was a little bit of a dip before as they tested that lower area, but it's holding. And on the upside, we had 66.79. No change. On to the LCN. Subdued trading, although we tested a little bit on the downside on that Chinese news, but holding up very, very well. So ASEAN, we have 84.79. You can see right there. That capped the market yesterday. Also on Friday, it's a key weekly level. And we can actually take a look at it. See right there? So you can see the importance of that 84.79. And it's keeping the market in check. Downside 83.72. Yeah, that's reasonable. And on to the guppy. This is a pretty key area here, this zone on the weekly. We talked about that yesterday, 52 to 52.78. Kind of seeing the market pare back a little bit. That 50-50 is still, we actually had 51.01, but we have some additional support at 50-50. So let's pull this out a little bit. We'll just mark this way. And this can remain the same here, no changes. And starting on. Still pressing the downside just a bit. We had 79.24. We've actually dipped below that. Kind of trying to hold that area. You can see all these touches coming across here, which is 78.71. Actually, that's where was the low for today. So we'll go with that, 78.71. With those touches coming across, should be some good demand in that area. If nothing else, just from a short covering standpoint. Upside for now is going to be right there. 80. Well, there it is, 80.12. So there's the bias chart. This is not bullish anymore. I'd have to say this is more of a range. There you go. And we can take a quick look at gold. Gold kind of holding here. We talked yesterday about this point of control area, the 1725. And we mentioned the 1715, which once you got past the 1715, opened the door for us to challenge the value area high of 1733, basically hit it to the tick. Then we paired back and we're kind of holding above that area here. So nothing dramatic. We're just kind of holding our own here in gold. Take a look at crude oil. Tad bit weaker. There's a 2-hour chart. That key resistance for right now is going to be 66.30. And for right now, 64.30. 64.36. Trading in a pretty tight range. I mean, not that tight of a range, I guess, if you look at it at 66, but we're kind of just spinning our tires right now. For right now, as long as they don't get above 65.31, that's going to be key on a 2-hour close. Just a real quick look back. You can see here we've kind of dipped back here, try to pick themselves up from the same day VWAP, kind of holding their own. Like I said, there wasn't anything that stood out to say, oh, that's a key level here. YM jumped up a little bit on this move, so I guess it stopped some people out. And again here, so there was two good volume areas here, but not anything dramatic. And this is something like we saw something really set itself up, and that's what I'm saying. The only now really my focus, as I said before, remains on this 30-minute chart. That really kind of takes the as some people call it, the wiggles out. You can kind of get yourself trapped just looking at these little 5-minute short-term charts. They're good if something big's happening and the market's reacting, but for the most part, you can get jiggered around, focusing too much. Once again, like I said, at this point now, I really only use it for just to throw the VWAP, same day and 2-day VWAPs on it, so that the 30-minute isn't cluttered. And if I see anything big that I see coming up from a volume standpoint, other than that, that's it. I mean, the 30-minute really works very, very well on these indices. I like to use the 2-hour. That kind of gives a little bit more bigger picture. I don't like to go with the 4-hour. You're waiting 4 hours before a bar completes. I see that you see more opportunities to lay out when you look at a 2-hour. Gives you a better idea. Also, we're able to step back and kind of look to see, as I said, the lay of the land, what's going on here. We can always go to a daily chart to look where we stand here. You can see that 13,185. I mentioned that again. I have it in pink because that's really, to me, that would be like a pivot. And that was my upside. I said, if this thing were to get going up here, I guess we had, you know what, if you think about it, we weren't too far away from it. You can see here, market got to 13,167. So we were pretty close to it. But to me, that's the pivot right here. And that's why I have it in pink. And I'm looking at the closes. So there isn't anything specific that I'm seeing here. But when I look here, you can see these closes here. And then you can see the market made one last run up in here. So to me, if it would have got past 13,185, wow, that could open the door for much further. So it probably makes some sense. Also, if you look at the daily 50-day moving average, wow, that came in at 13,142. So that's probably what they wanted to lace them off a little bit. So that probably makes some sense. We'll see. Looking at it on a daily. But yeah, it's important to look at it on a daily. 13,185 is my pivot. And then, like I said, from an intraday standpoint, the 2-hour kind of gives me a good lay of the land, what we're looking at, where are we going to push to, and then for the intraday trading, the 30-minute. I mean, honestly, in some ways, I don't even feel like even using the 5-minute. So I think it gives you a lot of, you can get, mixed around. But if you just focus on these larger time frames, and it's not even 30 minutes, not even that large, but you get a better perspective. You don't get thrown around like as if you're in a dryer with, oh, it's up, it's down, it's up, it's down, it's held. No, it's not holding. So that's why and this also with the profile, he's at 30 minutes. So there's a lot of good synergy between these. But that'll be it. Thanks for joining us in the European crossover webinar, and we'll see you in the chat room.